Good morning. This is Anka Metcalf with TradeOutloud.com. Welcome to my pre-market game plan for the major future indices, gold and oil for today. It is April 19th. It is 9:10 a.m. Eastern Time. And let's begin with YM. YM yesterday as the prior resistance level was 20,535 and it tested a support area and established support once again into a prior area of support that has been tested the day before at 20,393. From which, in the afternoon hours, we've seen a small rally that topped off at 20,480, from which it established a higher low, trying to move a little higher. So this is the first indication of a reversal on the hourly chart, 20,417 for the support area. And right now, we are topping off at 20,486, which is very close, just a few points higher than the resistance that was established yesterday at 2 o'clock. With that being said, the hourly chart doesn't look like it gives us any kind of direction. We are trading within prior day's range, and we're trading into Monday's range, and we're trading into Friday's range. So the range for these moves are literally from a daily support level that was established at 20,380, and the resistance area comes in at 20,570. So 20,600 is the top of the range that would give us confirmation that the price is ready to move higher. As long as the price will remain within these parameters, trading with a bias, whether long or short, are going to be very difficult. We've seen that the price has been bouncing off the bottoms and has been selling off the tops. However, we don't know for how long that motion is going to be in place. So for that reason, we're going to look for very small scalps today. Obviously, no bias for today for long or for short. So we're going to evaluate small moves at a time. We will continue to trade less than usual. And also we will continue to scalp the market, and we will look at precise areas once again. For this particular move, I'm looking for the 480 area as a potential buy, or the 470 area as a potential buy, where the price is actually testing the area right now. The price is sitting right here on this price. So I would like to see a tighter stop in terms of setups. There is no kind of setup, so there's only support here at 470, and I'm looking at 480 for a pop, possibly for a first target into the 20,500, which is going to be psychological, and also follow through in the 20 and perhaps into the 40 area. On a turnaround, it's going to be a little bit tough, because I will look for more confirmation for the price to break the 450 area, and that is going to be at least 20 points lower than where it is trading right now. And once again, the target is going to be very small. I'm going to look into 420 and 400. So very, very tough trading environment once again today. And that is because of the daily range. And it's only natural that we get these consolidations throughout the year. And these also happen when we have had some really powerful rallies, which we did. We did have a powerful rally in the month of February when we escaped from the range. And again, with this range that is developing right now, we may get a rally, or we may get a sell, a hard sell or a hard rally. This is what these coilings in the markets are doing. So let's get back to the S&P 500. The S&P 500 is looking a little stronger in terms of relative strength. It's leading with 0.31% YM, which is only up only 0.18%. And at this point, we are trading into a resistance area right here. S&P 500 looks more bullish from percentage-wise and also chart-wise, because it is ready to trade above this 47.50 area, which is a resistance area. And this can also potentially trigger more upside into the 55, and taking into consideration that the S&P right now is ready to trigger a daily buy. So if we trade over 2345 area, 2347.50, which I've showed you, we have the potential to run into the 2360 area. So that would be the void. In terms of target, I will communicate them. If something will set up, I will be communicating them into the private Twitter feed. For short-term target, we're looking for 55. For the downside, I'm only going to look for bearish only if we break below the 38 level and with the potential to fill into the 2330 area. And let's take a look at NQ. And if you recall, NQ was actually one of the strongest indices yesterday with the clearest pattern, because all in all, what we need to do is to look for plays that have clear chart patterns. Because if you look at a chart, if you start squinting, then that's really not a good pattern, and you're forcing a trade. So a rally that continued from yesterday at about 12 o'clock at noon, passing the first level of resistance and the second level of resistance right here. The big line in the sand was the 5400. 5400 is the only one that is really bullish right now. This is going to be my focal point. However, after such a strong rally, I'm going to wait for the price to settle a little bit off the open because there will be some profit taking from the London session. We are also trading into another area of resistance from this prior high of 54.13. We still have a tradable void all the way to 54.20 area, and other than that, we are heading higher, and there's another resistance onto the daily chart, 54.50. So it still has room to move higher. It is triggering a daily buy. It looks very bullish. It's one of the most bullish charts that we have right now. So the NQ and ES are going to be my focus for today. Let's take a look at gold. And gold has been pulling back from yesterday's highs around the 1284 area. 1294 areas. This is the area that I'm referring to. And right now we're getting a bounce exactly into the support area that has been tested for 1, 2, 3 sessions, one overnight session, yesterday's session's low right here, and then you can see this low grind down back into the support area right here. The fact that it's trading below the 20-period moving average may have some influence of the price wanting to test the 1283 area again. Keep in mind the 1280 area right here can potentially initiate a swing short or a day trade short, the 1280 back into the 1260 area, and that is going to be the target area. It's a pretty good risk to reward ratio. However, if you consider these highs at 1290 for the stop and an entry below 1280, you would have a pretty good risk to reward ratio moving lower. And now let's take a look at oil, and keep in mind oil numbers today coming out at 10:30, and for that reason I will not be trading oil ahead of these numbers, but I will be looking at oil after it will be setting up after the numbers. All right, so this is oil right here. You could see that it has been choppy and consolidating for a long period of time. Maybe these oil numbers are going to break the base higher or lower. If they break lower, any push to the 5250 area, it's going to be the breaking point that is going to send the price back into the 5150 area. So there is $1 move there. However, the stop will have to be very close to 53.20 area. And also, you may consider these highs very close to the 54, 53, 70, 76. However, I'm going to be looking at this trade. However, not a great risk to reward ratio. We're going to see how the hourly chart sets up, perhaps for a possible mini swing into the $52 area and the 51.50 area. All right, this is all for today. More trading ideas on my private Twitter feed. And we will be expecting real numbers. I think I've just mentioned that at 10:30 a.m. Eastern time. 10:30 a.m. Eastern time. So have a wonderful day. Have a wonderful, profitable trading day, and I'll see you guys tomorrow morning.